Ladies and gentlemen, you're highly welcome to the Dicalo Consulting YouTube channel. Dicalo Consulting Group is a management consultancy firm. We offer accounting related services as well as professional training in accountancy, Excel, and many other computer application software such as Oracle, SAP, as well as we provide tailor-made accounting services in order to meet the needs of clients. We have designed this YouTube channel in order to see how we can help our clients virtually in order to be able to have a good knowledge in accounting or basic knowledge, and then how they can apply them in their businesses. In this session, we'll be learning how to conduct what we call investment appraisal. This is very important aspect in financial management, and as a financial analyst you need to be very good on how you can appraise projects, how you can evaluate projects and advise whether management should invest or not. And one of the most widely used method of appraising a project is what we call the NPV technique of evaluating projects, or what we call the net present value. The net present value is simply computed by deducting the present value of all future cash flows associated with a particular project from the initial investment in that particular project. Now, basically, what I want you to understand is how to be able to prepare how you can compute your net present value within a minute. I realize that there are a lot of people who face a lot of challenges in computing the net present value because they faced a lot of challenges, so they take a long time in computing discount rates or discount factors, and then from there they then multiply to obtain the internal rate of return. But basically here we're going to show you how you can compute the internal rate, the net present value within a minute by using the FX function, which are automated functions which have actually been built within Excel. So I'm using Excel 2021, so please just follow up with me. Now they have given us a question here. The question is that compute the net present value assuming that the annual cash flows of 20,000 per year and a discount rate of 20%. And then they are saying that here the initial cash flow here is initial cash flow here is what, $52,000. So let us change, since we have everything in dollar in AEDs or in dirhams, let us equally change this currency to dirhams because we need to work in a common currency. And then this annual cash flows should be also be in AED. So now, first of all, the first thing is about you need to recognize the fact that in year 1 you have cash outflow of what, 52,000, and then you'll be having 20,000 from year 2 right up to what, right up to year 9. Yeah. Then your discount factor is what, or your discount rate is 20%. So basically, let's just focus. Okay, now like I've explained that it's easy for you to compute your your net present value within a minute. Okay, so let's see how we can do it. We have already incorporated all the cash inflows and outflows here. This is the period, this is the year 2021 to 2030, and then we have named them into periods. There are 10 periods in total. So first enter it. So to compute our net present value, you put, first of all, start with an equal to sign, and you put NPV, you click enter, and then you go to FX, you click on FX. Now they are asking you the first function. You have this dialog box appears which is called the functions arguments for the net present value, and the very first question there is what's the rate. The rate here, you simply click on it, which is what, 20%, and the second one, what are the values? So you select all the values, both cash inflows and cash outflows, and once you're done with that, you click what? You click on OK. I have taken just 30 seconds to compute my net present value over a period of over 10 periods. I have used just 30 seconds, which is very easy. Now we have what we call our decision rule. The decision rule here at the level of net present value simply means that how do you interpret these results to management? We assume that this is a new project that they wanted to invest into it. Now we are saying that if the net present value is negative, it means that you should advise the management to reject the project. Why? They are rejecting the project because of the fact that if they invest in that project, the total or the net benefit that will be generated from the project will be less than the cost that will be incurred. As a result of that, the project is going to generate a lot of losses that will affect the worth or the value of the shareholders. However, if the net present value is positive, then it means that what? It entails that this project is going to generate a lot of returns that will be higher than the initial cost of the investment. In this situation, you should recommend management to invest in the project. Okay, we have already learned how to compute the net present value within 30 seconds. Let us look at the other long procedure, the other long technique where most people use financial tables in computing it. So let's see how we can do it. We already have our cash inflows and outflows here, and then we have named these periods into 10. So the first thing in the second method is that what, once you have this, you want to use the financial table. The first thing you need to do, you need to calculate what we call the discount factor, and the discount factor for any net present value is given as what? Is equal to 1 divided by 1 bracket open 1 plus the discount factor, the discount rate, which is 10%. Since we're going to automatically drag it to the other financial periods, we need to log it. You press F4 and then you close your bracket, then I raise to the power 1. So shift 6, and you press this one, which is the first period. Now this is it. Now you simply control shift arrow. You will now have a discount factors. Already these values already computed, these present values. And now how do you get it? You simply take the present value for each year, the discount factor for each year, and multiply by the cash flow. So you see control shift arrow. So as a result of this, you realize that, let us check what will be our discount factor. ALT equals to, now we realize that our net present value using this technique is what? 23,849.44. all this in dirhams. Control 1, currency, you want to look for AED. Let us assume that we have let's put it in 1 decimal place. Okay, that's it. So let us check whether the amount that we have obtained at the level of both methods is correct. So you take the net present value under the FX method, which is taking just 30 seconds, minus what we have obtained under the method that is used in financial tables. Automatically you realize that what we have is 0, which means that our calculations are correct. So basically, you understand that financial analysts or financial managers, you always have huge volume of work that you need to do. The most important thing is how you can facilitate your job, or how you can save a lot of time so that you can think on important things. So I strongly recommend that you should simply use the FX function in order to easily compute your net present value, where you will simply start with an equal to sign, and then you type the net present value function, you press enter, you click on FX, and then you choose the rate, and then you click on value 2, where you simply select all the cash flows, both inflow and outflow. Those are the cash flows which have not yet been discounted. Yeah, and then you press on what okay, so automatically you get your net present value within the thinking of just about 30 seconds. Now you realize that this project, now our net present value in this project is what is positive, positive 23, which means that what we should accept the project. That is your decision. You advise the management to accept the project, because if they accept the project, or what invest, because if they accept or invest in the project, it's going to generate a lot of benefits that will be far greater than the cost which they have actually invested in their project. Please kindly subscribe to our YouTube channel, as we'll be dropping another video tomorrow, which will help us to see how we can equally prepare, calculate the internal rate of return, the payback period, as well as the discounted many other methods of evaluating projects. But kindly note that the most acceptable, the most widely used method, which is actually consistent with the maximization of shareholders value, is what we call what the net present value. We're going to have so many other examples on this net present value, so that you understand how to adjust for working capital, depreciation, and many other adjustments. Remember, here we have simply presented our net cash flows. We have actually not shown how the other elements have been computed, but in our subsequent upload, we're going to explain to you how to compute the various components that actually are incorporated within our discounted cash flow, which is the net present value. Please kindly subscribe to our YouTube channel, as well as comment and like, so that you can motivate us to do more work for you, to upload more videos, so that our audience can grow. The only way you can support our channel is by subscribing to it and liking our videos each time we post. We equally suggest that you should click on the notification button, so that whenever we upload any new video, you will automatically be updated that a video has been released, so that you can follow up. We equally have videos that we have posted on double entry. We have posted videos on corporate governance, I posted video on audit, and many other things in account. So please kindly subscribe to our channel, so that you will be updated with everything that we do. Thank you.